Welcome to today's Explainer. We're diving straight into a truly wild transformation right out of the gate today. We're looking at John Wiley Sons, trading under the ticker WLY. Now, this is a 200-year-old legacy publishing brand, right? But suddenly, they're finding themselves right at the absolute center of the artificial intelligence boom. So forget the dusty library books and printed academic journals for a minute. We are literally watching a classic, old-school publisher evolve into a massive AI data powerhouse.
Okay, let's dive into this. How on earth does a 200-year-old publisher survive the AI revolution? Well, spoiler alert, they don't just survive it. They are actually positioning themselves to be the engine running it. You see, the artificial intelligence models we're all hearing about every single day, they have this completely insatiable appetite for data. But, and this is key, not just any data.
Interim CEO Matthew Kissner really hit the nail on the head recently. He said AI is only as good as the data that fuels it. And honestly, that right there is the absolute crux of Wiley's entire strategy. Think about it. Large language models are notorious for hallucinations, right? Especially when they're just scraping the open internet. They desperately need verified, peer-reviewed, foundational truth to function accurately. And Wiley? Well, Wiley possesses exactly that. A massive proprietary repository of deep scientific and academic research.
And this verified science isn't just sitting around collecting dust in some digital vault somewhere. It's actively being integrated right into the cutting-edge tools of today. For instance, they're featured as an industry-first connector in Claude for Life Sciences. This means authorized users can deep dive into Wiley's verified scientific research directly through that AI interface. They're quite literally feeding real-world verified science straight into the algorithms. And here's the best part. They're monetizing this beautifully. Wiley issued a full-year AI revenue guidance of $45 to $50 million. But what's absolutely crazy from an analyst perspective is that year-to-date, they've already locked in $42 million of that. So this isn't just some conceptual tech pivot. This is tangible, hard revenue hitting the books right now, already completely blowing past last year's total.
All right, Section 1, the financial snapshot. Let's look at the hard numbers.
And this brilliantly illustrates just how strong their financial trajectory really is right now. Adjusted earnings per share leaped from $2.78 in fiscal year 24 up to $3.64 in fiscal year 25. And looking ahead to that fiscal 26 outlook, we're seeing an average target of $4.13. Management even recently raised their Q3 adjusted EPS guidance to the absolute high end of their anticipated range. So yeah, we're seeing some really significant bottom line growth here.
But revenue growth from AI is only half the story. The vital fuel that's actually allowing them to invest so heavily in this massive tech transformation, it's their aggressive cost discipline. I mean, they reduced corporate expenses by a staggering 21% in Q3 alone. That translates to a 12% reduction year-to-date, yielding about $17 million in total cost savings. And roughly 85% of those savings are directly feeding that ongoing tech transformation.
And all that financial discipline flows straight down into cash generation. Wiley is targeting a super robust $200 million in free cash flow for the year. That's a massive $57 million improvement year over year. When a company transitions its business model like this, cash is king. And Wiley is clearly generating plenty of it to fund their future.
Moving on to Section 2, a tale of two segments. Now, underneath the hood, it's really a tale of two completely different businesses. On one side, the research segment is absolutely booming. Publishing output is up 11%. Article submissions are up a massive 26%, and crucially, 70% of this revenue is recurring, with a customer retention rate sitting comfortably above 99%. Now, on the other side, the learning segment is currently struggling a bit, with revenue down 7% year-to-date, mostly due to macro market softness. So the entire investment thesis here really relies on the immense strength of research fully offsetting those temporary headwinds in learning.
And that research strength? It's truly global. They're seeing a lot of momentum in the corporate sector, now boasting 10 corporate subscription customers. Plus, submissions in emerging markets like India, for example, have completely surged, up 43% year-to-date. They're heavily supporting initiatives like the One Nation, One Subscription program in India, which is expanding their reach to over 6,000 institutions and 18 million users. That's huge.
Which brings us to Section 3, the competitive landscape.
Now, what's really interesting about this slide is how Wiley's profitability metrics actually stack up against other legacy media and publishing peers. The contrast is pretty striking. Wiley holds a really strong 9.24% net margin.
Now compare that to McGraw-Hill sitting at just 1.68% and USA Today down at 1.27%. This proves that Wiley isn't just generating raw revenue. Their aggressive cost-cutting and those high-margin AI and research segments are creating a highly profitable enterprise relative to the rest of the industry.
Let's look at Section 4, Rewarding the Shareholders.
So all that financial discipline and strategic pivoting connects directly to shareholder value. Capital allocation remains highly favorable here. Year to date, Wiley has returned $120 million to shareholders. They've aggressively doubled down on share buybacks, armed with a $250 million repurchase authorization, and they're projecting to retire around 3 million shares just this year. Oh, and for you income-focused investors out there, they have maintained a remarkable 32-year streak of dividend increases. That currently translates to a very healthy yield of around 4.5%. So they're perfectly balancing this aggressive tech reinvestment with returning capital to shareholders.
Finally, Section 5, looking ahead to 2027. Let's talk about the future.
To really scale this AI transformation, Wiley knows they can't go it alone. They recently announced a massive $150 million 5-year technology partnership with Virtusa to aggressively drive modernization. On top of that, they've secured a multi-year licensing agreement with Open Evidence, and they even took a minority equity stake there. This effectively embeds Wiley's assets right into daily clinical workflows, moving them way beyond traditional publishing and straight into high-value, real-time decision support. Because of these specific partnerships, management fully expects the recurring AI revenue to literally triple next year.
Which brings us to our final provocative thought for the day. Will Wiley's legacy content become the indispensable backbone of the entire global AI economy? I mean, we're watching a 200-year-old business successfully leverage its absolute deepest moat, which is verified, peer-reviewed knowledge, to become what might just be the ultimate hidden winner of the whole artificial intelligence boom. It's a brilliant pivot, and the fundamentals definitely show it's working. Thanks so much for joining me for this explainer. I really hope it gave you a clear, structured look into this incredible corporate transformation. See you next time.